What is going on, guys? Welcome back to the channel, and in today's video we're going to be going over the Fibonacci retracement tool. Now, the Fibonacci retracement tool allows you to plot key levels of support and resistance with just a click and drag motion. This is a very powerful tool that allows you to plot key levels of support and resistance so you can get into confident trades and have a good idea of where price will react. Now, the Fibonacci retracement numbers come from a mathematical formula that dates back to the 13th century. Now, this formula appears anywhere from in nature, it appears in the human body. I'm not sure exactly what it is, but if you measure one part of your body and then measure another part of your body, this formula pops up. It's in seashells. It pops up all over the place. And when you apply it to the markets, you're able to plot these levels of support and resistance that are very, very strong. And there's some key levels that are the strongest. Now, one of the main levels of the Fibonacci sequence is 0.618. This is the golden ratio. And more importantly, the level between the 0.618 and the 0.65 level is called the golden pocket. And this is a level where a lot of traders like to enter and exit positions. So without further ado, let's jump into the charts. I'll show you how to set up the Fibonacci retracement tool in TradingView, how to draw it, and how you can use it to get into really good trades. Let's jump into it. So here we are on the Bitcoin daily chart, and if you come over to the left side of TradingView, you'll see 1, 2, 3 tools down, and double click, you'll see a list of tools pops up, and at the very top, you'll see Fib retracement. You wanna click that, and if I just drag it out here to show you how it works, you click and then you let go and drag, and then you click again to set the levels. And now you can see here that we have the 0.65 level and the 0.618 level. This is what's known as the golden pocket. Now, this is a key level to keep an eye on when you're trading, and we'll get further into that in just a second. But when you first drag out your Fibonacci retracement tool, you'll notice that you don't have this 0.65 level. So I'm gonna show you how to get that right now. Now, if you grab your Fibonacci retracement tool and just draw it out anywhere on the chart and click on it, you'll see that you have this little toolbar up here, and you can click this little cog wheel for the settings, and you'll see all the levels that you have right here. Now, you'll notice that there's no 0.65 level here. If you come down to one of these grayed out boxes, you should see a different level, right? It might say, 1.27 or 2.2. I check it off so it adds it to my Fib retracement tool, and you just wanna click here and you wanna type in, I already have it, but it won't be there for you. You just wanna type in 0.65, and then you wanna go ahead and click OK, and it will add it to your tool right here. So now, how do you find these key levels of support and resistance? Where do you have to go on the chart to drag it? Where do you start it? Where do you end it to get these key levels? And I'm gonna show you right now. So here we are again on the Bitcoin daily chart, and you wanna make sure you get the very, very top of the wick, and then we can grab our tool, and you wanna put your horizontal line right onto the top of that wick, right about there. And then you wanna drag it down to a low, which will go from right here, and click, and there you go. Now we've plotted a Fibonacci retracement, and if you take a closer look here, if we go down, let's say to the 4 hour, you can see that these levels hold very strong. So right here, you see we held this level as support, and then we rejected off of this as resistance, resistance, resistance. 1, 2, 3 areas of support, another area of resistance. We peeked through a little bit, but then it got rejected. So you can just generally see that these levels are held very, very strongly. And we broke down into this Fib level down here, and it was respected as support a bunch of times. And here's our golden pocket, which is really where we're gonna be focusing. So there you go. We've plotted our lines of horizontal support and resistance using the Fibonacci retracement tool, and you can see that these levels do act as key levels of support and resistance, which is great for us as traders to know, so we have an idea of where we can enter and exit trades, and we can expect, where price is going to bounce, whether that be bouncing down or bouncing up. So you remember I mentioned the golden pocket. Now this is a very, very strong level, and a lot of traders trade just based off of this level. Say price has come up and we're coming up, and you get to this area. In this case, it would be acting as resistance. A lot of people will enter shorts here, and vice versa. A lot of times when you come down, people will see us come below this level and they will set their longs for the bounce off of it. You might be saying to yourself, well, if it's so strong, if the golden pocket's so strong, why don't I just always trade off of the golden pocket? And you can do that, but there's some exceptions. If you're drawing your fib retracements on a longer time frame, you don't always want to trade the golden pocket for a very specific reason, and that is everybody's using the Fibonacci retracement tool. And it could make it really tricky as a trader, and it makes it not as easy as it sounds. So as you can see on the Bitcoin daily chart, this golden pocket has held as long-term support here, basically through this entire level here. We almost came down to it, right about here, and then came up. But as you can see, this is a very strong level. So one of the main reasons you don't want to trade the golden pocket on a longer time frame is because the whales know about this too. So what the whales will do is they'll wait for price to come down to the golden pocket level, and when they get there, they know that there's a lot of retail traders putting long positions in at this level looking for the bounce. They will short Bitcoin and push the price through this level to liquidate all of those long orders and get the price lower so they can then buy at a lower price and have it come back up and take the ride back up. So a lot of people get wrecked by just trading these levels on the longer time frame. So I recommend not trading just the golden pocket on the longer time frames, although it can act as great support and resistance. Just keep a lookout where the whales will push it through the golden pocket to liquidate the longs before riding it all the way back up. Now, there is a time where you can trade the golden pocket, and that is on the smaller time frames, right? So if we come on down, let's get rid of our Fibonacci retracement right here, and let's move down to, say, the 15-minute. So here we are on the Bitcoin 15-minute chart, and just for example, let's find a high and a low, so we can draw our Fibonacci retracement, and let's just say from right here to, say, right here. Now, if you take a look at this, it's pretty crazy how well the price reacts off of this level. So as you guys can see, we did get price pushed all the way down past the golden pocket. We came back up. It respected the golden pocket as resistance. You could look for a short here, and if you did, let's say you caught it, right there, you could have wrote it down for a little over 1% profit, put 10x leverage on that, that's 10-12% profit. So you could have caught your short there, and then when we came down and bounced back up, on the way up, you can be looking for price to get back to the golden pocket for another short trade. And if you measure this out, say you caught it right there, you could have wrote it down, to here for about 1% profit, or you could have wrote it down more for about 2% profit. Obviously with 10x leverage, that could be 20% profit on your money. Now you can see it's very powerful. Price clearly respects these levels. Let's try to find another area where we can draw this. So let's draw it right here. We have a clear high, and then we come down here to a clear low, and look at that. What do you know? We came crashing through, we broke the golden pocket, came down, and then rode back up and rejected right off the golden pocket again. Not as strong of a move, but if you did get that, you could have come down for almost 1% profit. So, some moves are bigger than others, but you can see just how well the price reacts to these levels. If we just drag this out more, you can see here, look at this, rejection, 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 and then we kind of hung out here a little bit and we peeked through, but then eventually rejected. So you can see that this golden pocket level is very, very strong. Now, you can use the Fibonacci retracement tool and draw your lines starting at a low and going to a high as well. So for example, if you find this low right here and you drag it up to, say, this high right here, look at that. You have price come down, respect the support, we came up again, came down, respected the support before bouncing back up, and then eventually we broke it. So you can see, these levels are very, very strong. The golden pocket can be a very, very powerful thing to trade on the lower time frames. And just for fun, let's go over to the DGen 1 minute chart and see if we can draw some fibs out on this time frame. So let's just go for fun from here all the way up to this high at about here, and then we'll stretch it out just a little bit more. And look at that. We came up above the golden pocket, and then we came down, we respected it as support again, and then we flipped it into resistance before eventually rejecting back down off of it. So guys, the Fibonacci retracement tool is one of the most powerful tools you can use. Obviously, I do always preach that you should have multiple confirmations before entering a trade, but you can see how strong this golden pocket level is. And, you know, speaking of strong levels, I will say that, you know, the golden pocket is the first, you know, the golden pocket is the strongest level, and the 0.5 level, a lot of, you know, it's not an actual Fibonacci level, so a lot of people disregard that one, but as you can see, it does work. As you can see, you know, we stick it here, but the golden pocket is really what you want to pay attention to, and that's what you would want to be using to find out if you're getting a good entry or a bad entry. And this works on any time frame, right? It's pretty amazing. You can draw it from big moves and little moves. You know, if you just wanted to plot this area right here, you can grab this, you know, this to here, that low to this high. And as you can see, we are getting currently getting a little bit of a bounce off of the golden pocket right here. So guys, the Fibonacci retracement tool is super, super powerful. You know, if you're using it on the smaller time frames and you want to use that to trade off of, as long as you're, you know, getting other confirmations from other indicators or your other TA, that I think is fine. Obviously be careful, have your stop losses set, use risk management, but you do want to stay away from trading the golden pocket on the longer time frames, just because the whales know about this and they will, you know, push the price below the golden pocket, freak everybody out, liquidate everyone, and then they scoop up their cheap Bitcoin and ride the rip up above the gold, back up above the golden pocket. There are other Fibonacci tools. You know, it gets pretty intricate, but I did just want to cover this so you guys can get on the charts and start drawing out your Fibonacci retracements and get an idea of where you can draw these from one high to a low or from one low to a high, and you can see where price reacts off of these levels, and you can see how strong the golden pocket is, and then, you know, maybe back test it. You know, draw your Fibonacci and you know, put a couple practice trades in, you know, use that, use this long position and short position tool that we always use on the streams and stuff, just to test stuff out. It's risk free, and you can see, like, you know, if you saw price coming down to the golden pocket here, you know, you could be like, oh, well, I would put a long in there, and you could click this long position, and let's say you got in right at the bounce. Let's say you got in on this candle, you know, say here, and then you can drag up your profit to say 1% because you're using 10x leverage and you're only going for 10%. You know, go back test it, see how many winning trades you can get, how many losing trades you get, you know, while testing this this tool. But as I always say, you know, this is just another tool to give you confirmation when you're entering trades. You know, I never really recommend entering trades or just trading based off of one thing, but this is just another tool to add even more confirmation alongside your other indicators, your other TA, your other key levels. So I think that's all I got for today's video. I just wanted to put out a little intro to the Fibonacci tool, you know, show you guys how you can draw these retracements on different time frames, when to use it to trade and when not to use it to trade. So go hit the charts, draw some Fibonacci retracements, see where price reacts, and get this into your trading tool belt to help you enter confident trades. With that being said, that's all I got. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the